If Bitcoin breaks this level, it could trigger a cascade of liquidations, potentially pushing the price towards 72-74k. Keeping an eye on all these key levels, they will likely decide where Bitcoin heads next in the short term. Even in a massive market like the US, a 5% fall followed by the 8% spike from one single news headline shows how artificial and manipulated the markets are. It also shows how much control Trump and his administration have over the situation. Point is, people are preparing for further downturns. Remember, more volatility ahead. Because of the panic from Trump's tariff policies, asset markets are getting hit hard. And even the bond market, which is usually stable, is all over the place. The market expects rate cuts to begin gradually later this year. Tariffs, chaos, and Bitcoin, the Trump effect. Hi everyone, welcome to the channel. So let's get straight to it. Markets are getting rough and a lot is going on. I'm not going to repeat myself. We are in a bear market in a post-tariffs world. Does that sound dramatic? Maybe, but this kind of market could drag on for months. So, instead of sitting around waiting for things to calm down, we're going to break down what's actually happening. From Bitcoin's wild moves to how global news is shaking the entire financial system. Yesterday, Bitcoin and the overall asset market had a truly bad day. Bitcoin, for example, dropped down to 74k, but is now located at around 79k. We'll take a look at what kinds of movements occurred and discuss what kind of impact this may have on Bitcoin and the crypto markets. Looking at the futures markets, we can see just how disastrous Bitcoin's movement was. After rebounding to 79-81k, Bitcoin has now dropped back into the 76-77k range, which shows the importance of these levels as key support zones. We can see strong liquidations cluster below 75k, around 74. If Bitcoin breaks this level, it could trigger a cascade of liquidations, potentially pushing the price towards 72-74k. On the upside, there is still a lot of resistance around 81k. That's where we see a bunch of liquidity stacked up, and what used to be a support has now become a bit of a wall. If Bitcoin manages to stay above 77k, we might see another push back up toward that 81k zone. But if 77k breaks, there's a good chance we drop fast toward the next big liquidation area around 72 to 74. So yeah, keeping an eye on all these key levels, they will likely decide where Bitcoin heads next in the short term. Then, when the US market opened, this news spread. You've read it well. There was a rumor that tariffs will be suspended for 90 days. This caused the Nasdaq, which was down 5%, to surge 8% and close up plus 3%, total roller coaster. But then it turned out the 90-day suspension rumor was fake news. The White House confirmed that nothing like that was actually planned. As a result, all those gains were lost again and the market dropped. My point is that, even in a massive market like the US, a 5% fall followed by the 8% spike from one single news headline shows how artificial and manipulated the markets are. It also shows how much control Trump and his administration have over the situation. Relax. No conspiracy theories or political rants here, just my simple observation. Moving forward, the same thing happened with Bitcoin. Upon hearing the 90-day suspension fake news, Bitcoin surged. Then, once it was revealed to be fake, it dropped again, and then rebounded. That's how things played out. Because macroeconomic indicators and tariff-related news are covering the whole landscape, they are having a major impact on asset markets, including Bitcoin and crypto. The good news is that even after the dip and rebound, buy walls are being filled again on various exchanges. You can see it in red. This means that investor sentiment isn't completely dead, and whales seem to be managing the markets at least a little. That's somewhat positive sign. Now, with the US midterm elections coming up, even within the Republican Party, you can see signs that some are trying to slow Trump down a bit. And, as we mentioned in yesterday's video, the irony is that many of the same billionaires and tech giants who helped Trump make his comeback are now facing massive losses. My point is, we should probably expect some kind of statement or announcement soon. However, those kinds of changes will be more of a long-term development. For now, Trump is sticking to his guns, saying he won't even allow a 90-day suspension. Meanwhile, faced with 34% tariff on its imports, China is not backing down neither, saying that if the US doesn't back off tariffs by April 9th, they will hit back harder. and that they will fight to the end. This shows how serious China is about this trade war. Given Trump's unpredictable behavior and track record, it's impossible to know what he will do next. So, instead of trying to predict him, I think we should just expect more volatility before things start to settle down. Given how important trade between the US and China is, China being the US third biggest trading partner after Canada and Mexico, and the fact that China holds a big chunk of US debt, this is a major issue. And I cannot overemphasize it. We've got to keep an eye on the latest news. Larry Fink from BlackRock also mentioned that their stock price dropped over 20% yesterday, and they are seriously considering the risks. He added that every time he meets with CEOs, all of them say the same thing. This is a recession. The panic has already begun. That's how deeply the impact of the situation caused by Trump is being felt in the business world. Point is, people are preparing for further downturns. As mentioned before, we are walking on very thin ice right now. Remember, more volatility ahead. Also, there is something I wanted to share with you. It's something all of you should take very seriously. It's regarding the US 10-year Treasury yield. During last week, the first week of April, after Trump announced tariffs, people moved toward safe haven assets, including bonds. That's called the flight to safety in trading. As a result, with more people buying bonds, bond yields dropped to 3.8%. However, by April 8th, people started selling those bonds again and yields surged past 4.2%. Why so, may you ask? Because people are scared. They got even more nervous, not just about stocks or Bitcoin, but the entire financial system, including bonds. They do not see bonds as a safe asset and started pulling money out of everything. And this level of volatility in the bond market is very rare. Historically, this kind of volatility has only occurred twice. Just before the 2008 financial crisis in 2007, and when Trump was elected president. These two dates are not on the picture, by the way. If we try to put things in perspective, it seems the market is now gripped by stagflation. It's a mix of recession and inflation. And that creates a tough dilemma. Market expectations for a Fed rate cut on May 7 has been all over the place. As you can see in the chart, the chance of a rate cut shot up to 85% on April 6, then dropped back to around 35% by April 7. You can see it in orange as well. This kind of swing shows how uncertain things are right now. The Fed is in a tough spot. Cutting rates could help avoid a recession, but it might also make inflation worse. That's the tricky balance they are dealing with. Because of the panic from Trump's tariff policies, asset markets are getting hit hard. And even the bond market, which is usually stable, is all over the place. This table is from the CME FedWatch tool. It shows what the market expects the Federal Reserve to do with interest rates in upcoming FOMC meetings. The table lists the chance of different interest rate levels for each meeting. You can see the dates of the meetings on the left column and the federal fund rate ranges in the upper row. So expectations for a rate cut on the 7th of May have risen to 38%. However, the majority probability, 61.60%, still favors rates remaining unchanged. The market now sees a possibility that interest rates could be cut in May, and from June, the number of expected rate cuts for this year has increased from 4 to 5 in July, September, October, and December/January. This table shows how the market feels about where Fed policy is headed. The high chances of rate cuts later in 2025 and into 2026 suggest that investors think the Fed will lower interest rates if inflation keeps easing or if the economy slows down. It also shows some optimism that solutions to today's economic problems, partly caused by Trump policies like tariffs, might start to emerge. That's why the market expects rate cuts to begin gradually later this year. When we look only at the altcoin market, things are extremely tough since Trump took office. Altcoins are suffering heavily. For example, Solana has dropped almost 70% and Ethereum is down around 60% from its peak. This means that nearly all altcoins have reset back to the early cycle stage. Not just a regular bear market, but a full recycling of the cycle. This is a critical moment to reconsider the balance of Bitcoin versus altcoin exposure in your portfolio. We talked about it briefly in yesterday's video, but what's making altcoins suffer even more is that Bitcoin dominance continues to rise. It's now over 63%. The last time altcoins performed well and brought people into the market was between January and March 2024. During that period, Bitcoin dominance decreased slightly, and that allowed altcoins to have their moments. There was another similar event in November 2024, where, again, a drop in dominance brought new participants into the markets. But now, Bitcoin dominance is soaring again. That's why altcoins like Solana and Ethereum are dropping drastically, and people with high altcoin exposure are having an especially tough time. Data shows how painful this period is. So, where does Bitcoin go from here? After the sharp drop to 74k, Bitcoin rebounded slightly and is now hovering around 76k and 77k. We are clearly in a choppy, headline-driven market. If nothing major breaks in the news, I think Bitcoin will likely move sideways in a range between 77k and 81k. But if we get more tariff escalation or aggressive moves from China, a retest of 74k is possible. That level is a critical support zone now. On the other hand, if things calm down a bit or the Fed signals something dovish, we could see a push toward 82 to 83k, though that's likely to face heavy resistance. So, here's how I see it short term. Base case, Bitcoin chops between 77k, 81k. Bear case, drops back to test 74k. And bull case, relief bounce toward 82, 83k. Likely short-lived. We are in a period of extreme fear. This level of panic only shows up during big events like the COVID crash or the 2008 financial crisis. So, what's next? Right now, it's less about the data and more about all the uncertainty around what's going to happen next. Markets are jumping on every headline, and until things calm down, we will probably keep seeing this kind of volatility. Once things settle a bit, the data will start to matter more, and hopefully we will get a clearer picture. Alright, that's it for today. If this video was helpful, feel free to like, subscribe and drop a comment. Thanks for watching, and I will see you in the next one.